2015, the year 2015, a film was released called The Big Short, and it's a very interesting film indeed. Very well put together, very cleverly assembled film set only about 8 years prior to the release date. It was released in 2015, just a year or so prior to the onset of the subprime mortgage crisis of 2007/2008. So it's set a few years before that. And it's based on a 2010 book, The Big Short, Inside the Doomsday Machine, by Michael Lewis. And the film was directed by Adam McKay, who had previously been a television director, producer, and also a comedian. He directed Anchorman, The Legend of Ron Burgundy, for example, 2004, among others. But the film has 3 distinct threads, and they do come together. Michael Burry, who actually still exists. Michael Burry studied both economics and medicine and earned an MD, and also at night he did a lot of financial investing. Now, sometime after medical school, he set up a hedge fund, which is an investment in liquid assets to protect from market uncertainty. Now, in 2000, he set up Scion Capital, thanks to an inheritance and loans from his family, and he proceeded to short overvalued tech stocks. Shorting, by shorting, I mean he's betting on it losing. So it's not a long-term investment, it's a short-term investment, because the thing you're investing in is probably not going to be around. It's a short-term thing. So he proceeded to short overvalued tech stocks. At that time, it worked for him. By 2005, his attention turned to the subprime mortgage market, based on what he'd learnt from his tech stock shorting. Looking at lending practices over 2003/2004, he predicted that a bubble would pop by 2007, as early as then. Now, and that was in 2005 he predicted this. His research showed him that the bonds based on teaser rate mortgages on residential real estate would lose value when, within a couple of years, the rates were replaced with higher rates, and he saw those as vulnerable. Now, he persuaded investment firms such as Goldman Sachs to sell him credit default swaps. Now, the seller of a credit default swap, a CDS, insures the buyer against a reference asset defaulting, and the buyer of a CDS pays a regular fee to the seller, and if the asset does default, they'll receive a payoff. So during this, some of his investors revolted, not believing his analysis, withdrawing their capital. But he was proved correct, with a personal profit of $100 million, and for the remaining investors in Scion Capital, more than $700 million. He claimed that anyone paying attention during 2003-2005 would have seen growing risk in the subprime markets, and that federal regulators were at fault for only listening to a closed circle of advisors. He currently predicts that Tesla stock will collapse, for example. Meanwhile, this is another thread of the story. Jared Venet, who is a fictional character this time, but based on Greg Lippmann, who is a real person, at Deutsche Bank, starts to understand what Michael Burry is up to from a banker who sold him a credit default swap early on. He gets in on this too, earning a fee selling the swaps. He accidentally makes a phone call to an incorrect recipient, a hedge fund manager at Frontpoint Partners, Mark Baum, who is another fictional character, but based on a real character, Steve Eisman. Jared and his team explained to Mark and his team how the subprime loans are packaged in a way, they're packaged using CDOs, collateralized debt obligations, which is another financial instrument. And these are rated, these financial instruments that package the subprime loans are rated at AAA somehow. And that will guarantee their collapse. Mark's Frontpoint team investigate and find that the mortgage brokers sell their deals to Wall Street banks. The riskier the mortgage, the higher the margin. Hence the bubble. Now, Mark is willing to buy swaps from Venet. Sure enough, by 2007, CDO prices rise, but the ratings agencies do not downgrade the risk because of conflict of interest. Mark discovers the existence of synthetic CDOs, which bet in favour of the mortgage bond faulting, and that this market, the synthetic CDO market, totally dwarfs the whole market for mortgage loans itself. And Mark realises that the whole world economy is about to collapse for real. Meanwhile, another thread, Meanwhile, two young novice investors calling themselves Brownfield Capital come across a presentation by Venet accidentally as they're visiting an investment bank. They're a bit on the small side for this, but they visit an investment bank. They get refused to see anyone, but they come across Venet's presentation in the lobby. Just left it there, and that causes them to. They read it and they see some very important things in there, and that causes them to also invest in swaps. They are small, though, and so they seek the help of a retired trader, Ben Rickett. They soon suspect that the banks are possibly committing fraud. The banks are committing fraud, and they also discover that the SEC, the Securities Exchange Commission in America, which is the loose equivalent of the UK's FCA, the Financial Conduct Authority here, the SEC has no regulatory framework in place to monitor mortgage-backed security activity. Nothing like that. Should have. So they short the high-rated AA mortgage securities that are considered stable. Now, as the defaults start increasing, and this is where things are starting to hot up, as the defaults start increasing, they notice that the ratings are staying the same. How? Something that is clearly a very bad risk has a rating that says it's nearly risk-free. And it continues to do so. How could that possibly be the case? The banks and ratings agencies must be keeping the value of CDOs up in order to sell them before an inevitable crash. Well, anyway, Brownfield turned their 30 million into 80 million, but are distressed as the entire economy starts to collapse, affecting so many of the general public. And it's a very detailed story, and you notice I've not gone into any detail about how the film was shot. It was shot very well. It's such a very well put together film. I haven't got time for that. The story itself is fascinating. If you haven't seen it, please do. It's really good, and it's very entertaining. The Big Short, 2015.